Salesforce and Lululemon stock have been beaten down lately and are trading near their 52-week lows. Of course, I rated these companies as buys on the dip, so I like each of these at their current market prices. But more and more investors have asked me lately which one of these two I think is a better buy, since I have both of them rated as a buy. So I'll answer that question in this video. I'll compare Salesforce and Lululemon across several critically important financial metrics, including revenue growth, operating profit margins, and return on invested capital. I'll also share with you my proprietary discounted cash flow valuations on these companies, which calculates a fair value for these shares. I'll also share with you the valuation comparison on a forward price to earnings basis. I'll do all of that, and then I'll make my recommendation on which one of these I like better if I had to pick only one.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So I wanted to start by comparing these two on their revenue growth over the previous decade. Salesforce has increased its revenue from 6.7 billion to 39.5 billion over the previous decade. That's good for a compounded annual growth rate of 20.6%. That being said, Salesforce has made several large acquisitions that have facilitated growth in revenue inorganically. Meanwhile, Lululemon has also increased revenue from 2.1 billion up to 10.9 billion, good for a 19.2% compounded annual growth rate. So they've both generated similar revenue growth rates. However, Lululemon's revenue growth has came more organically. Salesforce revenue growth has came more so through acquisitions. Looking ahead and looking more recently, Salesforce is demonstrating better revenue growth, increasing its revenue by more than double digits, while Lululemon's most recently completed quarter, the company generated revenue growth of less than 10% and only 1% from the United States, and the management team is forecasting continued relatively slow growth in the quarters ahead. Salesforce, meanwhile, also reporting slowing revenue growth, but still above what Lululemon is forecasting, at least in the near term. Longer term, they both have excellent growth opportunities ahead. Salesforce investing in artificial intelligence with its program Agentforce. Lululemon expanding internationally and doing a great job of that. And that's an opportunity for the business, especially as tariffs make it more expensive for Lululemon to do business in the United States. The next metric I wanted to compare these two on is the operating profit margins. And two things stand out to me. Number one is the significant improvement from Salesforce from 2021 to 2025, jumping by 10x. It formerly generated an operating margin of 2.1% as late as 2021, and that jumped to 21.2%. This was a conscious effort from the management team. Remember, when the Federal Reserve increased interest rates in 2022, Salesforce went on a huge cost-cutting spree, shedding tens of thousands of jobs, and those cost cuts have really benefited the company in terms of improving margin. And at the same time, the company has been able to do more with less people. And it says it's because of artificial intelligence, that they're using their own internal AI to help customers with questions, to help further the sales process, to get people from question to customer at less cost to the business. And all of that is demonstrated in its improving margins. Lululemon has also generated improving margins, but not as drastically as Salesforce. Its margins have improved from 17% to 23% in the previous decade. Its margins will come under pressure as it has to pay more to import goods. Nearly all of the products it sources for the United States comes from overseas, and it's going to have to pay those higher costs. Now, Lululemon does have strong brand power, and so it's likely to be able to offset some of those increase in cost by increasing prices. Also, the industry is moving to a less promotional stance, which is always good for industry profitability. Nike, Under Armour, Adidas, Lululemon all have signaled that they're going to offer fewer promotions, fewer incentives, try to sell more product at full price, and that's always good for the industry to improve profitability. The next metric I wanted to compare these two on is the return on invested capital. And again, Salesforce making dramatic improvements over the previous few years from 0.6% to 7.8%. Still, Lululemon is much higher at 35.4%, but the trend for Lululemon has been lower, down from 41.7% to 35.4%. Still, overall, that's a very attractive margin. It's almost 3 times the company's weighted average cost of capital. This is very attractive for a business. So now that we looked at the financial metrics, let's look at valuation. What you're looking at here is my proprietary discounted cash flow model, and I calculated a fair value for Salesforce stock at $327. The current market price is $251, so Salesforce stock looks undervalued at current market prices. When I look at Lululemon and the intrinsic value I calculated at $244, the current market price is $166. So Lululemon stock also looks incredibly undervalued based on my DCF valuation. By the way, these charts you've been looking at have come from fiscal.ai, which is my preferred data provider. There's a link in the description if you're interested. Salesforce is trading at a forward price to earnings of 21, so it looks undervalued at current forward PE multiples. It's selling at near the lowest forward PE multiple going back several years. Lululemon also selling at lowest valuations in years at a forward PE of 13.6. So you can understand why I've liked both these stocks and have them rated as buys. Which one would I rather buy? It would have to be Lululemon. If I had to pick only one, I would pick Lululemon at current market prices.
Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.